Everybody, and welcome to Capitalizing on the African Opportunity, which is a Knight Frank webinar in conjunction with the Dubai Chamber of Commerce and Industry. So our objectives of today's session is to highlight the increasing role of Dubai as a gateway to investment into Africa, and also to increase awareness into alternative sectors, particularly agriculture and healthcare in Africa. My name is Ben Woodhams. I'm the Managing Director of Knight Frank Kenya, and I'll be your moderator for today. I'm a chartered surveyor with 27 years experience, 22 of which working for Knight Frank in Africa. Knight Frank in Africa have 23 offices spread across 9 countries with over 400 staff. From those offices, we've worked in 45 of the 48 countries in Africa in the last 18 months. So as you can see, the perfect platform for operating in the continent as a whole. In the Middle East, we have offices in Dubai, Abu Dhabi, Saudi Arabia, with 80 staff covering the entire Middle East region. So Knight Frank is perfectly placed to facilitate investment from the Middle East into Africa. So today we have Tilda Mwai, who is from our research department of Knight Frank Middle East, and she's going to begin with a presentation on Knight Frank Africa's Horizon Report, which is our signature research document on the continent's real estate market. After that, we're going to be joined by a panel of distinguished experts to discuss the opportunities that present themselves across the continent in terms of investing from Dubai. So during that session, and also during the Q&A afterwards, please do submit your questions using the Q&A section at the bottom. So without further ado, over to you, Tilda Mwai. Thank you.
Thank you, Ben, and good afternoon, good morning, ladies and gentlemen. I hope you can all see my screen, and thank you for joining us. As Ben mentioned, my name is Tilda Mwai. I am the researcher for Africa at Knight Frank, and it is my pleasure to be part of this webinar today. So over the next 10 minutes or so, I'm going to be providing you with a sneak peek of our flagship publication for this year, which is the Africa Horizons Report, which looks at market trends and opportunities in the real estate sector across the continent. Of course, I believe these are timely insights, especially after the year that we have just had, that was 2020. And so in terms of the agenda, this will be split between a brief economic backdrop and 3 themes that we have seen anchor the real estate sector over the past year, and that we expect will continue to do so over the coming year and also in the long term. So these themes include market resilience, innovation, and health and wellness. And so before I start, as a form of a market backdrop, I just look at the different reasons that we have to be positive while looking at Africa at the moment. Over the past year, the picture has been quite gloomy for Africa, and as we have seen with the recent spate of lockdowns in some countries occasioned by a 3rd wave of the virus, and with majority of the continent remaining unvaccinated, there's not too much of success stories that have been going across the media for Africa. But despite this, there are still reasons to be positive. And the first one being the economy. Africa's economy is expected to recover and record a growth rate of 3.4% in 2021, according to the IMF. In 2020, this economy was projected to have contracted by 1.9%, of which this was still a better off picture than had been expected. And already we have seen countries such as Nigeria coming out of a recession, and this growth is definitely something to be positive about. The other thing that we have seen is that there has been increasing mobility and activity in the different countries where we experienced lockdown. Now, data from Google Mobility Index, which is an index that tracks activity that has been logged into Google compared to a baseline that had been developed, taking in the 6 weeks to February 2020 prior to the pandemic, shows that by mid-May, majority of the countries had recorded mobility back to the baseline limits or even above the baseline limits. Now, further, if we look at Purchasing Managers Index from IHS Markit, you will notice that for countries such as Nigeria, Ghana, and Egypt, PMI was recorded at above 50 for the past 5 months continuously, indicating that the outlook indeed is a positive one. The other thing that I'd like to look at is innovation. And innovation in Africa has continued to consistently be ahead of the curve. And 2020 was a record-breaking year because tech startup funding was the highest ever recorded, and it grew by 278% over the 5-year period between 2015 and 2020. Moving forward, and as I will talk about further in the presentation, we anticipate that innovation will continue to play a key role in how African economies and cities actually recover past the pandemic. And the last one is the African Continental Free Trade Agreement. Of course, this has been widely talked about, and the reason why this is most exciting is that in January 2021, the agreement was formally launched, and this is anticipated to increase intra-African trade from the current levels of 17%. But even more important are the different opportunities that actually will stem from this, including diversification of exports, accelerating growth, competitively integrating the Africa's economy into the global economy, and also increasing foreign direct investment. Now, as we have seen from the economic data and anecdotal evidence, we can all agree that as a continent, Africa has remained resilient in the face of the pandemic. And this is why one of our key themes is market resilience. And as we will see moving forward, is that this theme has not only been evidenced in the economy, but also in the real estate sector. And to demonstrate this, I'd like to start off by looking at two sectors, which are the retail sector and the hospitality sector. With regards to the retail sector, the sector was one of the hardest hit sectors as a result of the pandemic. However, it was also quicker to bounce back across the region. As you can see from the graph on my screen, retail activity across a selection of countries, that's essentially Kenya, South Africa, Nigeria, Egypt, Uganda, was recorded at baseline levels or even close to the baseline levels as at mid-May. And to add on to this, their resilience was not only demonstrated through mobility alone, but also through other factors that include the fact that despite economic and mobility challenges that were posed by the pandemic, certain retailers, such as branded fashion retailers in cities such as Kampala and Nairobi, actually tripled their sales turnover on average. And another trend that we have seen is that, yes, we have seen retailers scaling down operations in some of the markets, but we've also seen others expanding. So for example, Carrefour, which is a major retailer across Africa, has been growing its presence in Kenya, Tanzania, and Uganda. And Retailers such as ShopRite are also expected to expand their store numbers in countries such as Uganda and Zambia. And another retailer such as LC Waikiki are expected to expand their presence into Zambia and Uganda, and also increase their presence in Kenya. Overall, in order to ensure that the sector remained resilient, we also saw that landlords came in to provide concessions in the form of rent discounts and deferrals in a bid to retain and also attract new tenants in the space. When we turn to hospitality, to understand the impact that the pandemic has had on this sector, for this report, we spoke to different experts who are directly involved with conservation tourism and luxury and business hotels across Africa. And to put this into perspective in terms of what impact the hospitality sector has on Africa, conservation tourism actually accounts for 80% of international travel to Africa, and it generates 24 million jobs and annual revenues that exceed 40 billion. And so in terms of hotels, we did see that hotel occupancies declined by up to 10% in the peak of the pandemic from the previous average levels recorded of 60%. And so the impact of the pandemic on this sector has been devastating, and the sector is definitely expected to take longer to recover. But there are various ways in which the sector has remained resilient or is anticipated to remain resilient. And one of those ways is that hospitality operators expect that there will be a rethink of operation models, especially for those involved in conservation tourism, in a way that they anticipate that this will take the features of integrating the different revenue streams, such as aquaculture and forestry, beyond tourism. We are also likely to see a consolidation in areas of management to increase the scale and the relevance of concessions that are being adopted. From in terms of hotel development, we are likely to see priority taking center stage towards conversion opportunities rather than new builds. And we also anticipate that with regards to the design elements of hotels moving forward, there will be an emphasis into more efficient design while catering for hotels that are mainly focused on business travelers. And so those are some of the ways that we anticipate that the hospitality sector will remain resilient moving forward. Another major theme that we look at in the report is innovation. And in terms of innovation, we believe that the ability of African cities to remain resilient will depend on their ability to innovate and also provide long-term solutions to their residents. And what this means in real estate terms is that we anticipate that cities will demonstrate resilience by their ability to sustain tenant demand, support the different rental levels and capital values, and ultimately deliver returns for investors. And so to illustrate this, we conducted a ranking to rate which are the most innovation-led cities across Africa. And to do this, we collected over 100 different indicators across the continent and also looked at over 500 cities. And these indicators were applied to this long list of cities and to generally determine the level of innovation and growth, and hence to just arrive at which cities offer the greatest prospects for resilience to real estate investors. And so from our ranking, as you can see on your screen, Nairobi ranked as the most innovative city in Africa. And this score from the long list of over 100 indicators, we broke down these indicators into 3 components, which were overall headlined by 1, the level of innovation activity in a city, and this included factors such as the total number of startups in that city. The second thing was the level of innovation funding that was going into the cities. Of course, as we know, COVID was a health crisis, and just looking at the level of, for example, biotech funding that is going to go into the cities was a great indicator into how we anticipate resilience will be demonstrated moving forward. The other factors that we looked at are innovation infrastructure, such as the number of research institutions that are recorded in each city. And so what we found is that Nairobi offers quite a good balance between these factors, really. So it offers a good balance between, for example, the number of research institutions available in innovation funding and the innovation activity that takes place in the city. But even more interestingly is that smaller cities such as Kampala also scored quite high for innovation, and this can be attributed to the agglomeration of research institutions and the level of innovation activity that has been taking place in these cities. And so in real estate terms, with increased innovation, as I mentioned, we anticipate that this will lead to increased demand for office space, residential housing to cater for the young working class and the sort of talent that innovation is expected to attract. And also, we are likely to see a direct impact in terms of the increased investor interest in sectors such as data centers, which has been a growing trend over the past year. And just to put this into perspective, Africa currently accounts for less than 1% of the total global data center capacity. And when you compare how Africa ranks with the leading, for example, world data center hubs such as London or Dublin, you will notice that the city with the highest capacity for data centers, which is Johannesburg, that ranks at a total live IT power of around 50 megawatts, which is how capacity for data centers is measured, ranks quite low compared to these leading cities that reflect over 700 megawatts of live IT power. And so, however, what we have seen is that over the past year, we have recorded increased investor interest in the sector. And this has been seen by the big capital commitments that are being made by institutional and equity investors, such as Actis, who earmarked $250 million to invest in this sector. And development finance institutions such as the DFC, who were investing over $300 million US dollars into Africa data centers. And what really is driving this interest? There are a number of reasons that we looked at in the report, and one of these reasons is localization, whereby with more countries adopting data sovereignty laws, we're increasingly seeing the need for data centers to be located inside Africa rather than outside Africa. The other ways that we're driving demand is through demographics and also through the adoption of green energy into these sectors. Further, in keeping up with this conversation about innovation, climate change is set to have a profound impact on Africa's rapidly expanding cities over the coming decades. And as such, we anticipate that even as Africa's cities get warmer and warmer, sustainable investment is expected to take center stage. Globally, the trend towards sustainable investing had started to record increased interest at the turn of the millennium, and this interest had dwindled down after the global financial crisis. But however, as you can see from the data on my graph, we have seen the number of Google searches for the term environmental social and governance aspects at a peak high at the moment in 2021. And so what this means, especially for real estate, is that sustainability has been the strongest drive for ESG. And in Africa, green buildings have continued to be more important, even outside of South Africa. And this has been driven by a range of factors, such as the changing legislative side, access to green financing, and also the fact that overall green buildings remain a feasible investment to investors, as research indicates that green buildings typically command between 3 to 6% in rent premiums in the US and the UK at the bare minimum. And so while this is not specific to Africa, green buildings typically fall under the prime segment of the market, which has seen them attracting higher rents. And moving forward, we anticipate that buildings will continue to attract greater occupier interest as different occupiers renew their commitments to occupy spaces that actually reflect their brand values and commitment. And finally, the final theme that we looked at is the theme to do with health and wellness. Of course, with COVID being a health crisis, we have seen a growing interest in this sort of in health and wellness being reflected in the spaces that people occupy. And one of the ways that we have seen this reflected is that, of course, when it comes to residential, there has been a lot of rhetoric in terms of people preferring the suburbs compared to the city. But as you can see on my screen, for Africa, the picture is a bit different, and cities will continue to be preferred locations for people to live in, since they also serve as economic hubs. But however, the types of residential houses that people occupy will be nuanced depending on the different attributes. In our attitude survey, majority of our top rated attributes that people will look for while moving into new homes had a lot to do with health and wellness. So attributes such as outdoor space, air quality, are increasingly expected to influence buyer decisions. The trend towards health wellness is not limited towards residential, but also office spaces. And so research indicates that 1 in every 4 employees are anticipated to suffer from mental illness. And in a previous study by the World Bank, they estimated that depression and anxiety actually cost the global economy approximately $1 trillion US. Now, this number has obviously ballooned with the pandemic, but to better understand what this means for the workplace, we will turn to another Knight Frank publication, which is Your Space Report, that looks at the trends impacting the workplace. And to do this, the report conducted a survey of approximately 400 global leaders who collectively employ over 10 million employees. And it sought to understand their outlook with regards to the workplace moving forward. And as you can see, 90% of the respondents indicated that they regard real estate as a strategic device, contrary to the popular opinion that the office is dead. And so whilst the office is not dead, the form and function of the office is anticipated to change and will definitely allow for more collaboration. And health and wellness is expected to form a core part of this. And so the respondents also ranked well-being as their 3rd highest strategic issue in the workplace. And even further, 46% of these respondents believe that office amenities that are expected by their employees will increase over 3 years. And 45% of these amenities will have a lot to do with health and wellness, and will include amenities such as gyms, outdoor spaces, and all that. That has been a brief breakdown of our Africa Horizons report. I'll now hand over to Ben to sort of take us through into the next phase of the webinar.
Thank you very much, Tilda. That was a fascinating look into what I have to say is an excellent piece of research by Knight Frank, the Africa Horizons report. Please, I was going to say, please let us know if you'd like a copy of that, but what we will do is we'll send you a link to all the participants to make sure that you are able to download that and read it at your leisure. So this now takes me through to the next section of our session, which is the panelist Q&A session. So I'd like to introduce you to our panelists. So I'd like to ask all of them to turn their cameras on, please. First of all, we have Susan Turner, who's the Managing Director of the Residential Valuations and Advisory Division of Knight Frank South Africa. Susan has 20 years experience in real estate. She's a professional valuer, a member of the RICS, practices primarily in valuations with agriculture as her specialist field. We also are joined today by Shazad Jamal, a partner of the Healthcare and Consultancy Division of Knight Frank Middle East. He has 10 years experience in healthcare and alternative asset classes. And we are also joined by Abdullah Momade, who is the Chief Representative of the Mozambique and South African Division of the Dubai Chamber of Commerce and Industry. So welcome to you all. Thank you very much for attending today. What I will do is start off with my first question. We're going to remember, we're focusing on investment flow from the Middle East into Africa. So focusing on the opportunity, my first question, the UAE has continued to be among the top 10 countries in FDI flows to Africa. Despite the pandemic, we've continued to see a lot of Middle East investor interest across the continent. What advantages do you see in doing business with Africa, and which sectors do you feel there's a great potential to explore? And that goes to Abdullah of the Dubai Chamber of Commerce.
Thank you very much, Ben. Good morning. Assalamu alaikum. Good afternoon, everyone. Our amazing audience in Africa, in Dubai, and in UAE. It's a pleasure to be here with you today, and thank you very much for the invitation. It's funny, we have organized recently a webinar, and the topic was why invest in Africa now, the Africa advantages. So we see, we must analyze a combination of factors, and let me mention a few of them. Let me start with demographics. The UAE businesses are looking for sizable markets, and of course, Africa represents a continent with a population of more than 1.3 billion people, and it should surpass 2 billion in between 20 to 30 years. At the moment, we see significant markets. Let's give a few examples. Ethiopia, Nigeria, RDC, or even Tanzania or South Africa. And at the same time, when we talk about Africa, we have a booming young population. So more than 50% of total population are under 25 years. And the workforce cost is quite low in Africa. And we can also mention that among, for example, the 10 fastest growing economies in the world last year, we find at least 6 African nations. So we have great examples of economy performers like Rwanda, like Ghana, Ethiopia, or even Kenya. And we think that the African markets are now more open than ever, and efforts to bring FDI and efforts to improve the ease of doing business is something that's very relevant and attractive to UAE investors. And of course, it's important also to note that Africa leads the world in mobile adoption, which continues to offer the biggest cross-sectoral economic opportunity. When we talk about the UAE, and according to our findings, 1/3 of the continent is still unexplored by UAE investors. And Africa offers investment opportunities across sectors as countries look, of course, to modernize their infrastructures. And when we talk about, let's say, specific sectors, we look to a few examples like agribusiness. We see a great potential on that. Healthcare, manufacturing, and especially now with the African Continental Free Trade Agreements, and also pharmaceuticals, infrastructure, ICT, and of course, logistics.
Great, thank you very much, Abdullah. Okay, my next question. One of the key sectors that Middle East investors have continued to target across the continent has been agriculture. What do you think makes investment into the agriculture sector in Africa attractive to investors? And that clearly is going to Susan.
Hi, Ben, thanks. Yeah, part of one of the interviews in the Africa Horizons was with Lucy Tembakwayo from My Growth Fund. And he mentioned that agriculture has historically been the underdog and not the sexy industry. Whilst, yeah, I guess I agree with the sentiment. The risks and challenges in the market can both lead to it to be financially and socially profitable if well invested. So I think there's definitely room for this industry to become sexy. Although a quarter of sub-Saharan Africa's GDP comes from agriculture, 60% of that population are involved in smallholder farming, which just leaves huge scope for the agriculture. It's just it's untapped the potential within agriculture. And we would expect that the global demand for agricultural produce is going to track global population growth, which is only expected to level out at 2050. So the demand for agricultural produce is going to increase, but there's only a finite amount of sustainable productive land available globally. And we have seen that climate change, degradation, water shortages have also affected this supply. Depending on who you talk to, there's varying amounts of agricultural land available for investment. Best estimate says about 110 million hectares of greenfield land suitable for commercial agriculture, of which 30 million are available and readily cultivatable immediately. The remainder would require quite a bit of infrastructure investment, which then also ties through to what Abdullah was saying. There is scope for investment in other sectors as well as agriculture, but that would support agriculture. The cost of land in Africa is relatively low, together with the inputs and the young population, which Abdullah also mentioned, is also available to be upskilled and trained in the sector. So it also makes it attractive and can lead to higher returns. There's good access to water. I think one of the big attractive things to investors into the agriculture sector is the opportunity to invest in the entire agricultural value chain. It's agribusiness. It includes storage, cold storage, investment into infrastructure, including roads, port, electricity, increased training, and all of these can lead to higher returns. And I think then finally, from my point, what would be attractive and socially acceptable is that smallholder farmers, they make up 60% of the agricultural current situation in Africa. Yet typically they're the lowest income sector. So some high scale investment into agriculture can significantly improve their lives, improve their production through training and inclusion into outgrow schemes and projects like the Chitangiri Dairy in Kenya and Silverlands have a slick project where they dip up to 35,000 head of cattle every year for the local community. So I think agriculture is definitely a sector which has a large range of investment opportunities across it. Yeah.
Okay. I mean, that's fascinating to hear, and obviously there are huge investment opportunities in agriculture in Africa. We've seen some massive organisations like Unilever all across the continent. One of the challenges that we have here in Kenya, Susan, is that through inheritance, we're seeing the subdivision of land and the sort of smallholders agriculture getting smaller and smaller and smaller and less efficient. and so their ability to sort of make a valuable contribution to the whole sort of agricultural sector is getting harder and harder. Is that a challenge that we're seeing across other parts of Africa as well?
Yeah, I think one sees it across Africa. It was interesting to note that I read a recent study by Deloitte, I believe, that indicates that there are only 100 commercial farms in Nigeria, which is a large country, in excess of 50 hectares. So this small scale agriculture and getting smaller and smaller is definitely a trend. I think that realistically, investment into Africa has to be inclusive, and it has to look at projects and ways and means that we can improve the livelihood and the productivity of those small farms, to encourage them not to keep reducing. You know, that part of the reason why they are subdivided is because they need some income. So they subdivide, they sell half, they retain half. So to try and stop that trend. But yes, it's a challenge.
Okay, thank you. Right, moving on. So in the Africa Horizons report presentation that we just received, excuse me, we've seen that the spectrum of demand for healthcare services across Africa has widened, and it's no longer restricted to just basic affordable healthcare. So what are the potential synergies that can be explored between the Middle East and Africa with regards to healthcare? Shazad.
Good afternoon all, and thank you for having me here. I mean, this is an interesting question. When we talk about synergies, we can and definitely with Abdullah on our side, we can see that there's been significant amount of investment within Africa by companies operating out of the UAE. Most recently, we saw about a $7 million investment by in Helium Health, which is basically a medical record company, into fintech and technology, right, based healthcare provisions. Then Emirates Healthcare Group invested in Al-Maida Healthcare. Manazil has been in Egypt as well. So there has been a lot of traction by Middle Eastern investors looking at the healthcare sector. I understand that one of the sovereign funds out of the UAE is also looking to create a fund specifically for healthcare within Africa. So there is a lot of appetite for investment within the UAE or the GCC looking at Africa, because of course there is great potential and there is in terms of population as well as a lot of gaps in terms of infrastructure. Just to and we see that I mean people in Africa are also looking to visit the UAE specifically. I mean, I was just talking to the Health Tourism Authority in Dubai, and I learned that Kenyans and Nigerians are fall within the top 5 medical tourists coming to the UAE. So there is a lot of appreciation of the improved healthcare position within the UAE, and also we can also look at them not only to look at we can also see medical tourists and also look at how we can have medical tourists coming in from Africa, but also look at companies from the UAE look to invest in healthcare and healthcare projects within Africa. We don't have to solve the African healthcare infrastructure gap completely, but there are pockets. There are pockets of high net worth individuals who are looking for quality healthcare within their country. And when we see the provision of healthcare and the hospitals in UAE, we see that there are small healthcare facilities, centers of excellence, and these are the areas that we can bring from the UAE into Africa and address niche markets. And that I think is the way to go forward for the UAE specifically. To invest in Africa, which means that we are looking at niche markets, not straying away from what we are strong at, creating small hospitals, centers of excellence into these countries, and address this gap that is missing. And this, of course, gets catapulted because of COVID as well, because now there's limitation on how much people can travel. So quality healthcare within the country would be the ideal solution.
Interesting. So my takeaway from that is it's 2 different directions. You've got the investment by healthcare organizations into Africa itself, and you've also got the Middle East being aware or becoming aware of the demand for healthcare from medical tourists who are not only going traditionally to India, but also going to the Middle East as well for specialist healthcare that they can't necessarily receive on the continent itself. So thanks, that is fascinating. Okay, so another quick question. This has come from the participants. My question is, how do health and agriculture sectors in Africa lead to financial inclusion to further drive the economy and African growth? So in my view, this sector is heavily dependent upon, but attracts less funding, and its human resource reward mechanism is low. Shazad, while I've got you, do you want to have a go at that one?
Yeah, so the thing is that, I mean, people, when they look at healthcare, they're usually quite afraid of investing in that space. And another issue is that, you know, they talk about human capital and human capital development as well, which they perceive as lacking. But the thing is that, like I mentioned earlier, I mean, if we talk about having strong local party connections within Africa, investing and partnering with them, I think that's the solution. And we don't need to go big. We just need to be small and have bite-sized investments that will help include, and that will help inclusion of and get interests of financial institutions as well. So we could work on a PropCo-OpCo model as well, so that we have more financial inclusion, more local party investment in the infrastructure, while the operators or healthcare operators can capitalize on what they do best, which is provision of healthcare, and they don't need to worry about the rest of the stuff. So that effectively means that we've got people investing local in-house on the real estate side. We've got operational investment by could be a potential JV partner locally, as well as the foreign investor and operator coming in to address this need. And I think this is the formula that we can take forward. We've seen it here in the UAE as well. I mean, we've seen that, you know, that there are PropCo investors, that there are OpCo investors, and then there are local investors as well. And people are investing from all over the world. We've seen healthcare operators coming in from South Africa, from India, from the UK, and this is the model that has been available here as well. And this is something that can be replicated, where there'll be financial inclusions from all aspects, and of course institutional investment. That is key as well. Excellent.
Okay, thank you for that. A lot of opportunity there for not only investors in getting a return on their investment, but also for improving the lives of people on the continent as well. Right, next question. Chambers of Commerce, I've given you a clue as to who this one is going to, usually play a supporting role in economic development. Could you please tell us about the role of your institution, as well as initiatives undertaken to alleviate challenges that investors may face on the African continent? Over to you, please, Abdullah.
Thank you, Ben. Well, yes, we have a key role when it comes to the relationship between UAE, Dubai, and Africa. But let me start from our origins, you know, for a better comprehension for the audience. You know, as a brief background, like Dubai Chamber was established in 1965. So, and it was to be a trusted partner to Dubai's business community. And the role was basically to act as a bridge between the government and the dynamic private sector. So the Chamber focuses on boosting business performance by encouraging innovation, and I must say also facilitating international expansion, and of course promoting entrepreneurship. And it's also important to note that Dubai has always enjoyed, let's say, a strong trade relationship with Africa. And this was thanks to the Emirates' close proximity to the continent and its status as a preferred hub for African companies. So over the last, let's say, decades, the relationship between Dubai and Africa has taken on a new direction, and especially following the 2010 instructions of His Highness Sheikh Mohammed bin Rashid Al Maktoum, the Vice President and Prime Minister of UAE and ruler of Dubai, to place a stronger focus on the continent as an economic partner to Dubai and the UAE. So supporting these instructions from His Highness, Dubai Chamber basically scaled up efforts to increase its presence and activities within Africa, and constantly evaluating new expansion opportunities on the continent. So over the last years, the Chamber has established new platforms and channels for dialogue between public and private stakeholders. We also have organized high-level trade missions between UAE and Africa. We have launched the Africa Gateway portal, which is under our website. And this provides valuable business insights into promising African markets. And of course, we are always trying to identify, let's say, business opportunities in Africa that offer the most potential for our members. The best examples I can give you of, for example, a high-level event is the Global Business Forum Africa. It's our flagship event, which will take place on the 13th and 14th October in Dubai during Expo. And, you know, this is the most significant bilateral economic, let's say, forum or event between UAE and Sub-Saharan Africa. And this business platform will showcase African economic potential to the world and, of course, build cross-border partnerships. At the center of our strategy, and we're proud ourselves for this, Dubai Chamber's representative offices. You know, we have 4 international offices among the 11 international offices across the world. 4 of our international offices are in Africa and strategically located in Ethiopia, in Ghana, in Kenya, and in Mozambique.
Great. Okay. Thank you very much for that, Abdullah. Right. Obviously, a fantastic organization that will help facilitate investment into the continent. So please do reach out to Abdullah if there's anything you think the association can do for you. Right, a quick question here from the participants. Given the significant demographic pressures and urbanization, large-scale, low-cost housing provision appears to be a top priority. What sort of appetite do the panel participants see among Middle East investors to get involved? Now, this is slightly off topic because it's not about healthcare and it's not about agriculture. So I think I'll take this one. And I think if we look at Kenya as a typical example, low-cost housing has been identified as one of the 4 pillars of economic growth that the government is promoting, but it is not easy for private developers to get into because typically it's very difficult to get a profit margin on low-cost housing. So what tends to happen is government gets involved either by giving land or by agreeing other incentives which enable that profit margin to be built back into the model, such as tax incentives, guaranteed takeoff, and so on and so forth. So there is definitely opportunity and scope, and we're seeing the Chinese doing this in quite a big way in this part of the world. So I would encourage Middle East investors to certainly find out more about it, and we can help you there. But it generally tends to involve government participation. I don't know, Susan, if there's anything you want to add to that for your part of the world, but certainly that's how that is going in East Africa anyway.
Yeah, in South Africa, it follows similar trends. It's obviously a massive sector which government is paying an awful lot of attention to, and I think the unfortunate thing, reading the statistics, is that the housing gap is only getting wider. The lack for housing, so it's a significantly important sector, and we have to pay attention to it.
Yeah. Okay. Thank you very much for that, Susan. Okay, moving on. So affordability remains the greatest challenge to healthcare. Yet the sector is pivotal to economic growth, as we've seen from the pandemic. How can this challenge be addressed, presumably in Africa? Shazad.
Yeah, I mean, there are many ways to address this, but I mean, it depends on the role that the state is willing to play. But I mean, let's just say the most practical solution is to look at insurance. Insurance as compulsory and mandatory insurance, and we've seen that there's been a lot of success when we talk about insurance. For example, if we look at the program in Rwanda, which is the mutual health program, we saw that a lot of people got signed up for it, and a lot of people who previously never had access to healthcare are also benefiting from this. There's also the M-Tibba one. I talked about it earlier, maybe sometime, with pharma access, and that has benefited about 4 to 5 countries, such as Kenya, Nigeria, Tanzania, and Uganda, if I'm not mistaken. So there is this prepay model that needs to be instilled. And if we look at it from a UAE perspective, we see that, you know, as people got mandatory health insurance, the number of visits to healthcare facilities improved, and also engaged the private sector as well. We are seeing the same thing in Saudi Arabia as well, where the mandatory insurance has actually started helping facilitate and grow the private sector. So I think this is it. Otherwise we can look at more PPP sort of models, whereby the government looks for a guarantee to pay, and private operators come in to look to address that gap. But I mean, if I was to put my money on it, I think it's in health insurance is the way to go.
Fine, thank you. I appreciate that. Okay, so whilst the agricultural sector has numerous opportunities, it also poses numerous challenges to the investor. What models of investment have you seen work across the sector, and why, Susan?
Yeah, not an easy question, Ben. But yeah, we've seen increasing investment into agriculture over the past 10 years, which has been kind of driven by various factors: economic growth in emerging economies, global food requirements, and changing investor strategies. And I think that investment will continue as agricultural assets sort of become more mainstream and considered an emerging asset class in diversified portfolios. In terms of investment, we've seen specialized financial vehicles, which include private equity and mutual funds, competing to attract investment in this sector, and they've been pretty successful, with in excess of $110 billion US dollars invested in Africa over the past decade. The agriculture of it, obviously we touched on this a little earlier, is that there is your smallholder farmers, and then you've got your big commercial agricultural farmers, and there is a level of overlap. We see funds investing into the sector: Silver Street, UFF, AgDevco, USAID, AgriP, and others. And they all each have a slightly different model, but what is common throughout is that sustainable development and social upliftment form part of their investment criteria. And into that bracket, they try and uplift and upskill the small holders. So a little bit, the funds that I've dealt with, the investment models vary. Like I said, Silver Street make direct investment into agriculture on behalf of their investors, and they then hold 100%, or in some instances slightly less. They own a percentage of the Crooks Brothers portfolio, but they are directly invested on behalf of their investors, which are sort of institutional pension funds, foundations, and endowments. And then they work on a 10-year lifespan, and then exit and or possibly roll into a new fund. It's a sort of typical funding mechanism. Another large fund, UFF, they have a model that varies a little bit from region to region. In South Africa, they have had a situation where they bought land and then leased it back to an operator, and facilitated finance. In countries like Zambia, where land is held in leasehold, they typically co-invest with someone and take over the leasehold, so that they are getting profit from capital gain, lease income, and profit share. They also work on a 10-year sort of term, where the farm can then be rolled into a new fund, sold to the operator, or sold to a third party. What is important to also note that if they sell to a third party, that there has to be a commitment to environment and social performance, so that's a trend that's following through from beginning to end on all of these kind of things. AgDevco, they look at the equity financing. AgriV look at taking up 25 to 75 as a investment with a minimum entry level of $5 million. Typically, these funds invest 5 to 25 million US dollars. That's a typical investment, and they mainly exit after sort of a 10-year period.
Okay.
But another interesting sort of area that's kind of come up recently is something called crowd farming. We've all heard of crowdfunding, but crowd farming is a relatively big sector where individuals raise money on digital platforms. And it was mentioned Africa is the fastest growing cell phone area in the world. So following on from that, but this is allowing smallholder farmers to connect with investors, particularly in Nigeria. And the World Bank actually estimates that crowd farming market could be as large as 2.5 billion US dollars by 2025. So that's quite a big funding model that is happening. And
yeah,
following
I
on,
think that probably reflects the innovation that we see across Africa. African solutions to African problems.
Yes, I was just going to say, in your neck of the woods in Kenya, you've got Twiga, which is a B2B platform to link farmers to market. So there is technology also coming into play with funding into Africa. So
excellent, Susan. I'm going to stop you there because we're running out of time. I think we've got time just for 2 quick questions. Thank you, Susan. The first is, so what funding facilities are in place at the Dubai Chamber of Commerce to support African entrepreneurs? Abdullah, do you want to just have a very quick stab at that? And then I think I'll have time for one more question after that.
Sorry, Ben, I lost the connection for a few seconds. Can you repeat?
Yeah, what funding facilities are in place at the Dubai Chamber of Commerce to support African entrepreneurs?
Oh, okay. That's a good and valid question. Yeah, as I said before, so entrepreneurship is a key pillar of the Dubai Chamber strategy, and we aim to boost competitiveness and growth within Dubai's private sector. So our entrepreneurship arm is Dubai Startup Hub, and this initiative organizes a wide range of programs and initiatives that empower startups and provide them with, let's say, the knowledge, tools, and support they need to succeed. But it's important to point out that we don't provide any financial facilities or funding. But we have, under this initiative, which is the Dubai Startup Hub, one program which, under the name Market Access, is a program that opens opportunities for international startups to solve, let's say, issues or problems of Dubai-based companies.
Excellent. Thank you very much for that. So again, a great channel for investment opportunities. Right, a quick one for you, Shazad, before we wrap up. I think this is probably the last question we're going to have time for. This came from one of the participants. As an ancillary healthcare issue, the lack of scaled pharmaceutical manufacturers has become obvious over the past year. How do Middle East strategic investors, like, for example, Mubadala, view direct greenfield investment opportunities to expand Africa-based vaccine production? You're on mute, Shazad.
Yeah, that's a tricky question, and I really don't think I can respond on behalf of Mubadala. I wish I could.
No, don't do that. This is your opinion only, please.
Yeah, but the thing is that I think there are plenty of pharmaceutical companies within Africa, and probably investment could be directed towards those to look at solutions directly. I mean, for vaccine production. But then, of course, we need to look at longevity of such a solution, because it cannot be only to solve the COVID crisis, because what happens next? So I think we'll have to look at this more holistically, and I don't think time permits us now to address this question. But maybe another time I'll definitely be happy to take it on.
Sure, fine. Or perhaps people could contact you directly to answer that. I think I'll just squeeze one more in. Susan and Shazad, just very, very quickly, your last soundbite. What opportunities have been presented by the pandemic to your sectors? Shazad, do you want to go first?
Yeah, I don't mind. See, the opportunity is that everybody and all the countries have realized that they cannot no longer rely on going to South Africa, going to India, going to the UAE for healthcare. You have to create solutions in-house within country, because if COVID persists, there's no other way. So we have to invest in quality healthcare within our country and believe in our people to do so. And if that means in the long term, we create health, medical colleges and everything to upskill, yes, that's probably the way forward.
Okay, thank you. Susan, same question to you. Opportunities presented by COVID to your sector?
Generally, I think agriculture was the one sector relatively unaffected by COVID, but what the pandemic did highlight is that the demand for food globally is going to continue. So the sector is going to remain strong, and the challenges that need to be overcome are generally more logistic, border closures and movement. But yeah, I think as a sector, agriculture came off quite lightly on COVID.
Okay, thank you. Right, I think we're out of time, everybody. So that just leaves me to say thank you to my panelists and thank you to Tilda for a great presentation. Thanks to the Dubai Chamber of Commerce and Industry for facilitating this session. Thanks mostly to you, the participants, for joining us today. Any unanswered questions which we haven't had time to get to, we will endeavour to reach out and answer directly. And as I said, a copy of the Africa report will be available, and we'll send that link through to you. Africa Horizons link coming your way via email. So thank you very much, everybody. Stay safe, stay healthy, and please don't forget Knight Frank has the biggest network of real estate consultants across the continent. God bless.
Thank you.
Bye-bye.
Thank you. Take care.